businesses.
Blue chip, you might say?
Well, they were always blue chip, but the way that they grow is not through innovation. If you look at Google, Facebook, Microsoft, and Apple, and ask yourself, when was the last hugely disruptive thing that they've created? You're hard-pressed to find something that was even done in the 2010s.
Yeah, actually, that's a good thought. I mean, the iPhone for Apple.
iPhone was 2007.
Yep.
Microsoft was in the 1990s. Google was in 1998 with core search. Maybe there was Maps and Gmail in the 2000s.
Chrome, Android. They bought some of that.
Facebook, it was the core service that we built in the 2000s, and then they acquired brilliantly, right? So I'm not saying that they didn't acquire well.
Yeah.
My point is that core organic innovation hasn't been there for a long time. So this is a moment to just be reflective of the fact that these are some incredible companies with ginormous cash flows. But now you've had this foundational platform shift, which exposes the fact that they really aren't good at innovating. And at times when they've tried to organically innovate, they've massively misallocated capital.
Oculus would be the example of that.
Either through a bloated balance sheet, so some would claim that Google overspends, or through just pure misallocation by starting projects that just are not large, but consume large amounts of cash. That would be the Facebook VR example. But in all of this, I think when you cut staff and expenses as a way to meet and beat, and top line growth is in the low single digits, it's an important moment to recognize that these companies have now transitioned to being cash cows. And if you look at sort of how financial markets value cash cows, they're very valuable, but it's not where you look for growth. And so in a world where rates eventually get cut and we start to come out of a recession, it tends to be that other people get rewarded. So that's an idea
and
that's
adding to your point here, they're not allowed to acquire things. Microsoft's acquisition
the Activision thing
dead. So they're not going to be allowed to buy stuff. So then you're right. What is the growth here? They're not able to innovate.
I think these companies are ex-growth, which is why they use their cash flows to do what? Borrow money cheaply to buy back stock, to manipulate their equity, right? You can manipulate and overcome dilution. You can manipulate earnings per share. You can manipulate the number of shares outstanding. And so just by the nature of that whole game, a bunch of passive investors will end up buying more, which helps the active investors who own that stock. So it's a game. So if we're not in the world where
financial engineering would be the most charitable way to say it.
We're in the financial engineering phase, which is fine. And by the way, you can make a lot of money. Facebook's up 90%. So there's a lot of meaning just this year.
Oh, yes.
So there's a lot of room for financial engineering, but it's not where you need to look to figure out where these big improvements and uses of this next generation platform technology are going to come from, most likely.
Sachs, is this a fair assessment in your mind, looking at the major tech companies, the FANGs?
Yeah, I mean, their growth is down to single digits. So I think Microsoft had 7% year-over-year revenue growth. Google was at 3%. I think Facebook was
4%.
First quarter sales rose 3% from a year earlier. But at least that was an improvement because it's actually gone down for 3 straight quarters. So yeah, but you're down to single digit year-over-year growth rates. Nevertheless, most of these companies beat expectations. So Microsoft shares rose 9%. Meta jumped 12%, might be up more now. And I guess Google got a little bit of a bounce. And they all gave a pretty upbeat forecast. The only one that wasn't upbeat was Google, where the CFO, Ruth Porat, said that the outlook remains uncertain. But all the other ones seem to indicate that things were going to get better. So I think what's interesting about that is just the mismatch that we have between how well these companies did in this quarter versus how uncertain the rest of the economy is looking right now.
And maybe the Fed's behavior.
Yeah, so maybe this is the flip side of what Chamath is saying, is they're not growing very fast, but they are profitable machines generating a lot of earnings. And they seem to be pretty immune from what's happening in the economy right now. Or at least that's what they're saying. Now, you're right. In a parallel track, there was an interesting interview that Powell did. So Jerome Powell gave an interview. It was actually kind of like one of these hoax calls where a couple of people pretending to be Zelensky engaged him in an interview.
Oh my God, that was crazy. You want to explain that reference?
Oh my God.
Oh my God, what is happening?
They've done this a number of times where they've gotten, major leaders. I think they did this to Macron and some other people where they pretend to be Zelensky and they do an interview.
It's like Ali G.
Yeah, but they played it straight. I don't care that he was fooled into giving the interview. It's like, who cares? But some of the things he said were really interesting. I mean, number one, Powell said that the economic outlook for the year was looking pretty uncertain. And he said the most likely scenarios were either sub 1% growth, so staying out of recession, but just barely, or he said going into recession. So he thought that was roughly about equally likely. He admitted that we had the worst inflation in 40 years, and that's why interest rates were necessary. And he said that it was necessary to slow the economy in order to combat inflation. And he then even went further and said that it was necessary to cool off the labor market and even to cool off wages specifically, because that's how you combat inflation. That's the only thing we know how to do in a situation like this. So I think this is certainly a political mistake for Powell to say that his objective here is to hurt the wages of the American people and to basically cause a recession. But that is his view, apparently. And I think that we are headed for, it seems like a recession. I'm a little surprised that the earnings reports from these tech companies are so good because, or at least their forecasts are so good.
Well, they can cut spending. I mean, we talked about this last year when we were trying to predict what would happen. I remember saying, well, I think Chamath and I were talking about this, and I was like, well, Chamath was saying, hey, earnings are going to go down, and there's a PE. And I said, well, what if they just stop spending or they make a lot of cuts? Well, here we are. People are just saying, you know what? We're going to cut our way and do stock buybacks. And that's another way of financial engineering to route around the Fed, right? And to make the stock go up. Worked incredible for Facebook. I mean, my Lord, they were at $91 a share and now they're over 200.
Right. But just to bring it back to the economy. So look, I think we agree that these tech companies seem to be pretty immune. They've got a large cushion in terms of their ability to continue generating earnings because of all the bloat that actually gives them a margin of error where they can just keep cutting to prop up earnings. I'm a little surprised that they think their revenue forecasts are going to be so positive because, again, they were guiding upwards generally. So they seem to think they're not going to be impacted by the recession, and maybe they won't be. Again, I think what was interesting from Powell is the way that he seemed to think that the only thing we know how to do, this is basically what he said, the only thing we know how to do in this situation with inflation is to kill the economy, is to slow the economy, and specifically to kill jobs and wages. And that was pretty remarkable to me because there are other things we could do.
Such as?
Okay, well, one thing is that you don't have to print so much money.
Cut spending, austerity.
So yes, our fiscal policy remains completely out of whack. We're running $2 trillion annual deficits right now, past COVID. So he could have said, listen, we could get off this reckless fiscal policy and be more restrained, but he didn't want to go there. The other thing he could have done was address the supply side. One of the ways that you can reduce inflation is not just to kill demand. You could actually affect supply chains. So like cost of energy, for example. Energy is a huge input into the economy. And one of the things that happened at the beginning of this administration is they made it much harder to drill for oil and gas. And I think Biden sort of reversed course on that. At the State of the Union, remember he had that line where he said, we can't get off oil and gas for 10 years. And the audience started laughing. But in any event, the point is just that it's too little too late. They could have done more on energy to keep costs low. And then there's a whole bunch of other critical inputs into the economy besides labor. And what you could do is, I think you could go category by category and say, how do we get the price of these key inputs into our economy down? How do we resolve supply chain bottlenecks? How do we make it, easier to get access to whatever the key commodity is? And I think there's things they could do if they're just willing to work at it. Maybe this isn't the Fed's job. This is more the administration. But what you could do is say, listen, we're going to make it easier for people to produce and create supply. And if you have a higher supply of goods and services, then you will start to bring inflation down. Because inflation is just the amount of money in the system divided by the amount of goods and services. And when the amount of goods and services hasn't gone up, but the money supply has gone up tremendously, you're going to have inflation. And that's why I think it's a little bit misplaced to be killing demand the way they're killing it, is because fundamentally the problem here is they flooded the economy with money, both through government stimulus and through quantitative easing. And then also they made it harder on the supply side to produce, certainly with energy. So it seems to me that the approach they're taking for us to get out of this is like taking a meat cleaver to the economy, or a sledgehammer, really. And it's the most violent possible way that they could solve the problem they previously created of too much inflation.